Hello everyone, welcome to my channel. I've been advocating that this rally has legs to it and it's real and we can trust it to a degree because the wind is on our back as the long-term interest rates are coming down and the Fed at some point is probably going to start reducing interest rates in 2024. I don't think it's going to be sooner than that. I would project that it's probably going to be like in the fall of 2024. But as long as the long-term rates keep coming down, and they've come down significantly to the point that mortgages were starting to go into the 8% arena, and now they're back in the 7% arena, and the 10-year bond is below 4.2%. It's going towards 4% when it was close to 5% at one point. So I think the wind's on our back. I think we have reason to have some confidence in this rally, but we want to look at the other side and consider it for a second before we get too enthused. Another factor is inflation is going to start to fall. I think we're going to have deflation, and I'll tell you why. The United States is producing 13 million barrels of oil per day. The Mideast and OPEC keeps cutting production and we keep increasing production. We're producing 13 million barrels of oil per day and we're exporting 6 million of them to other countries. We want to thank OPEC for creating a nice oil market for our oil producers. The price of oil has come down to the 70s and sometimes into the low 70s. There's two ways of looking at this. Some of it is that other nations beyond OPEC, like the United States, like the South American countries and so forth, and Canada, are producing oil and they're making up for it on the one hand. On the other hand, demand has declined, especially in China, which is in a recession. And Europe it's either in a recession or on the verge of a recession. Their need for oil has dropped considerably. If oil drops too much, we really want the Goldilocks phenomenon. And the Goldilocks phenomenon is we want it to fall somewhat, but not too much, because too much means that the economy is stalling badly and we're going into a recession. Right now it's in the low 70s. I've heard it said from oil traders that if it gets down to $67 per barrel, that could signal that we're starting to enter a recession, because the only way it starts to go into the 60s like that is if both supplies increase by our domestic producers and demand falls due to an oncoming recession. The other thing to watch is the jobs. We got a JOLTS report, that's the job openings report, on Tuesday that said that the number of job openings had fallen about a little more than 500,000, about 600,000. It was 9.35 million jobs open previously, and it came in at 8.73 million jobs open. Again, this is just perfect. You want it to come down somewhat, coming down about 500,000 to 600,000 jobs. That's perfect. It gives us confidence that the jobs are going to keep coming down gradually. Now, if they ever come down in a big jump downward, that's recession time, is what you're thinking. We're looking forward to December 8th. The full jobs numbers, the employment numbers, especially the non-farm payroll report, that will be especially important. If it's way below 200,000, like let's say it comes in at less than 100,000, oh my God, then you're worried about a recession. But if it comes below 200,000, let's say 150 to 170,000, that's the Goldilocks numbers. We want them to keep coming down, but to keep coming down just right as Goldilocks would have it. We have significant signs of deflation creeping in right now. New homes, that is homes that are completely constructed, they're brand new, they have gone down 18%. And used cars have gone down 18% in price. So we have these beginning signs of deflation that are significant. Some airlines have cut airline fees anywhere from 28% to 32%. we also see commodities coming down in price. Significantly, lumber, which at its highest point was at like $1,700, wow, at its high point, has come down to the 500s. These are major savings. This is the beginnings of some deflation. The CEO of Walmart recently projected that there's going to be deflation in 2024. But then we have the bears haunting us, and that's why I'm bringing this up. So you're watching for the factors that could signal a recession, and I think it's mainly going to be those jobs numbers. You have people that have predicted crashes before, like Jeremy Grantham. He says that there's a 70% chance that the market is going to crash in a major way in the next 60 days. I have that voice kind of haunting me. He thinks we're in a super bubble, that we reinflated, that in 2022 the super bubble went down somewhat, but now we're reinflating it, and we're getting close to those 1929 and 2000 scenarios where we could have a severe stock market crash. But I think it's probably too early to get too optimistic about inflation. I think it's going to come down, but I think it's going to come down gradually, and that's why I'm thinking it'll be the fall of 2024 before they start even considering cuts. I use the Trueflation numbers, and I like to look at the aggregated inflation that's occurred since January of 2020. That's come down. It was close to 24% as you look at the chart, and now is down near 23%. So there's been a slight reduction in the aggregated inflation, and that's why you feel when you go shopping that inflation hasn't come down at all. Well, it just has maybe stopped going up, but it's still as bad as it ever was. And we still get numbers where it's increasing slightly. And, any increase on top of the massive increase we've had is just adding injury to insult. There's some thought that some of the rockiness that the mega caps have had recently is due to a rotation, people rotating out of those stocks into smaller stocks, and the smaller stocks have been doing somewhat better. I'm not terribly enthused about this, but it's a factor to take into account. It propels me to use TQQQ, the TQQQ, instead of FNGU, which is the 10 largest technology stocks. The problem with the 10 largest is they don't benefit from any smaller stocks because they're just the 10 largest, whereas TQQQ, it has 90 smaller stocks that might benefit somewhat more from the smaller stock effect. But if you really want to trade this, the Russell 2000 is the index to look at. So if you wanted an index to trade small stocks, that would be IWM, which is the Russell 2000, which is a lot of smaller stocks. And the UVM is the triple leverage version of that. For every dollar that the IWM goes up, the UVM goes up $3. The UVM is more risky and is meant for day trading, where the IWM is meant more for longer term investing. In the last month, the IWM has made about 5% and the UVM has made about 10%. The heart and soul of this channel is the QQQ, the 100 largest companies on the NASDAQ. For me, that is the stock market. That is the thing I trade the most. I would do individual small companies here and there as a flyer, but mainly I focus on the QQQ, and especially the TQQQ, which is triple leveraged on the QQQ in a bullish way. And as you look at the chart, you can see that QQQ has made 5% and TQQQ has made 15% in the last month. Not bad. I tried to just hold some QQQ, but I almost would rather direct that money towards trading the TQQQ just because I know how that thing moves and I can make money on it seemingly on days even when the Qs go down. I've gotten that used to it, and it's volatile enough that it can make you money if you catch the waves right. And I go by the headline news. I follow a day trading channel, Trader TV Live on YouTube. They are very helpful. I also watch Bloomberg, and I kind of go back and forth between the two channels, and I react to the news because the stock market reacts to the news in the short term, and it might only react for a couple of hours, but sometimes that's all you need, especially when you're triple leveraged. I don't think this works if they're not triple leveraged. You just don't have enough bounce in it. That's my point of view, and that's my life right now. I also hold NVIDIA, the engine of artificial intelligence. I hold it for the dream. A related stock, super microcomputer, whose symbol is SMCI. NVIDIA has had a rough time. They've only made about 3% in the last month, while super microcomputer has made 15% in the last month. I was able to buy some NVIDIA for $462 on its lowest dip, so I got lucky with that, and it went back up to $465 because of the lower interest rates. So hopefully we're back on the path to the goal of going over 500, which it really should easily do because they had such excellent earnings reports. I also own the bond funds TMF, TLT, and JNK, and they've done very well, and they will continue to do well. And I see them as mostly risk-free in my mind anyway, because if the rally doesn't hold, if a crash comes, what will happen? They will lower interest rates. And if we have the Goldilocks scenario where it's a smooth landing, where inflation goes down, they eventually will lower interest rates. And lowering interest rates makes these bond funds go up. And so I see them as a good deal. The TMF is the triple leveraged bond fund on 20-year or longer bonds. The TLT is just the 20-year bond fund. And the JNK is the junk bond fund that pays a very high interest rate of around 7%. It will also benefit when interest rates go down. It's the most conservative. It's really funny to say that the junk bonds are the conservative thing to do, but it's spread out among so many bonds that the risk of default is seriously decreased. And looking at the chart, you can see that JNK is at the bottom. It's only gone up 2%, but it pays that outstanding rate of 7%. So I actually see it as the most conservative. I own all three of these equally, and I have $100,000 or more in each of them. The TLT is the light blue line, and that has made about 8% in the last month, while TMF, it's been a long time coming, but it's finally shining, and in the last month, TMF has gone up 24%. I plan on holding them. I see them as balancing the risk I'm taking on stocks to some degree. So that's the way I roll. I plan to be trading TQQQ furiously in the coming days, and I seem to be able to make money on that fund for some reason, even on negative days. So I'm going to keep doing that. And I think the other investments are sound, especially the artificial intelligence investments. I think they are truly undervalued at this point. That's the way I roll. Thanks for watching. Be sure to check in to see how this all pans out. Thank you.
I'm on my own, broken and alone. I feel the rain crashing down all around this empty town. I'm searching for the lost and found, but you don't care, you're unaware. Keep moving like the scars aren't even there. It's in the air.